Well, during these crazy times, I'm here to put a little bit of reassurance to let everybody know that Fountain Mortgage is open for business and fully operational. Here's a couple things that we're doing. All of our sales staff and our operations staff are built to work remotely. We're using virtual meeting spaces so that we can keep our communications efficient and timely. All of our phones are out to our cell phones, so we never miss a call. Additionally, we've got our artificial intelligence with our online digital loan application platform to make the process easy and simple for clients, so therefore they don't have to come into an office or worry about doing anything the analog way through email. We are treating purchases and refinances slightly differently. We have a processing group specifically dedicated to our purchase clients and another processing group specifically dedicated to our refinance clients. On purchases, here's a couple things that we're doing. Loan officers are going to issue a pre-approval within 1 hour after communicating with a borrower. We can issue a full loan approval within 1 day, and we will get a file submitted to underwriting within 24 hours. On the refinance side of things, we're experiencing a little bit higher volume, but we're still going to put priority on those clients as well by getting underwriting done in 2 days. Even though this is a first for many of us to go through a crazy time like we're experiencing right now, I think it is important for everybody to know that our operations staff and management staff has been through something similar in the 2008 financial crisis. We powered through that, and we're going to power through this.
The Federal Reserve has taken emergency actions to cut the federal funds rate to zero. Here's the bottom line. A 0% Fed funds rate will not lead to a 0% mortgage loan rate. Mortgage bonds will always have a higher level under which investors will simply not purchase them, and mortgage rates will reflect that. While 0% interest sounds great to any homeowner or anyone who's planning to buy, it's important to slow down and talk about a couple of things and what this means. First, the Fed does not control mortgage rates. Their cuts apply to rates for loans between the Fed and banks or from banks to one another. These are likely short-term securities, credit cards, home equity lines of credit, and auto loans. Second, the Fed's actions most quickly impact the rates on U.S. Treasury securities. These markets can influence mortgage-backed securities, which will ultimately affect mortgage rates. In times of uncertainty, other factors can overrule the norm. This happened in 2008. Despite aggressive cuts by the Fed, mortgage rates hit a floor and never fell further. The same is happening now. Here's the good news. It's still a great time to buy. There are still great houses on the market, sellers are still selling, and homes are still being sold fast. Owning a home will always make sense if you can financially afford it.
We've seen a really wild swing in interest rates. There's been a lot of movements in both directions. It's really fast moving. So the best advice I can give is, reach out to your lender directly, and we can assess your individual situation, and we can really go through the numbers. The best thing you can do is to just get prepared in advance. So if the time isn't right for your scenario right now, it may be in a couple of days, a couple of weeks. So call us directly, and we will walk you through that, answer any questions. Hope everyone remains safe, and we will talk to you soon. Thanks.